Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday, the 10th of July. The markets are taking a little bit of a risk negative angle, not too significant, and it's not really taken hold too badly today. But there's not been a great deal of data out in recent days to really sort of set the tone, and markets are focusing on the ever increasing infection rates of COVID-19 in the United States, raising death numbers as well, and it really is sort of beginning to seep back into markets without anything really else to go on. So what we've seen is a bit of a dollar rally coming through yesterday. We've seen the oil price falling over, both WTI and Brent crude just sort of rolling off the top a little bit. We've seen equity markets just a little bit mixed. I mean, to be honest, if you look at Wall Street, for example, you've got the NASDAQ at all-time highs, the Dow far below that sort of level, and the S&P 500 a little bit mixed. It sort of suggests that the tech stocks are really the main winners at the moment, and the older economy stocks are not doing all that well. And if you look at the breadth of the S&P 500, that really is what we see. Futures again sort of falling back a little bit today. My take on this is I still think this is going to be ranging for a while as the July data starts to sort of come in a little bit negative, following on from that strong rebound in June for the United States. Anyway, in terms of outlook today, little bit of a mixed outlook really. The dollar had been stronger earlier on. That's sort of given up a lot of the gains that it saw. The euro's now reclawed back higher. Gold back above $1,800. Nice basis of support there for gold. These Forex majors. The risk appetite is a little erring negative, although not decisive in any way, really. It's a little bit of a mixed to slightly risk negative end to the week. In terms of data points, not a great deal, really. We've got, just before I go on to that, I've just noticed yields going lower. Yes, yields going lower. That is, again, it's just reflective of the negative sentiment that we've just started to come back into markets. 57 basis points on the 10-year, that's the lowest it's been since April. So that sliding 10-year, that is risk negative, and also sliding or flattening of the yield curve on a bear flat on a bull flattening, which is risk negative as well. So that's interesting. Right, okay. Now, data points today. The PPI for the US, a little bit of inflation data to end the week. PPI expected to hold ground pretty much on the actually expected to tick a little marginal amount higher actually on the core number. Actually improving also on the headline. Let me just show you that. You can see here. So expected to tick back a shade on the head on the core, and again retreat, unwind back towards zero, not far off zero on the headline. So yeah, those PPI numbers for the United States could be a bit of support there for risk appetite, but generally speaking, yeah, we're still looking a little bit corrective. Okay, so my chart today is the dollar Canadian dollar, US dollar CAD, and interesting moves on dollar CAD. It seems to be at an inflection point. This downtrend channel has been in place for the past few months, rallied to the top of the channel, then started to drift back lower. But look at the importance of this pivot line here. Well, we have had the support of late June, 3480 area. Is a consistent pivot line actually over recent weeks, and picking up from there yesterday, rallying back to the trend line again. Is this a moment at which we're going to see the rally falling over again on the dollar? I still am anticipating a weaker dollar through the second half of 2020. And this is a moment at which sort of the dollar Canadian could be at an inflection point again. Look at the RSI, 52, currently 49. 52 was where a market peaked previously. Again, 49 back in late May, 53 in mid-May, 53 also, I think, 55 actually, early May. So it just suggests that the market is still in this sort of trend lower, but rallies are a struggle for the for dollar CAD, and I still think that this This is likely to turn out to be a rally that ultimately falters and tests back towards that pivot line of 34.80 once again. I think unless you see a market moving above 37.15, which was that late June high, I don't really think you can say that this is a decisive recovery. I think this would be ultimately a range play, but we would still favour a downside break from that range. You've got the momentum indicators, as I said, hovering around inflection points on a near-term basis, but even if we do see a broken downtrend channel, I would not be necessarily backing that as a decisive move higher. You can see here on the hourly chart, actually, it's sort of almost testing a pivot line at 36.20 as well at the moment. And as I said, it's fairly ranging, and that it's reflected on the hourly chart where the RSI sort of comes back to 70, falling away, hits 30 or just below, rising. So it's fairly ranging actually on the hourly chart. I'm not anticipating too much further. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.